yes, there will be a lot of people who free ride off of the decentralization, right? So, somebody who just holds the ETF, and that's all they do, and then they retire, and then they're able to benefit from the increase in purchasing power due to just holding the ETF without ever having done anything else. Um, I'd say, they earned it, right? In the sense that they underwrote the risk, and they created demand for Bitcoin. Um, but they did benefit from everybody else who was running a node and holding their own keys and keeping Bitcoin decentralized. Um, so it's really challenging to um, at the extreme. We have to start fudding third-party custodians and saying, "Oh well, Coinbase could get hacked any day, right? Tomorrow, Coinbase could get hacked." And I think that that gets less and less effective as each day goes by. That Coinbase has not been hacked, and so we really have to, I think, emphasize the intrinsics of like sleeping more soundly at night because you hold your own keys, or doing a multi-sig, right? You can't do a multi-sig if you're using Coinbase. You could do collaborative custody. There's also, I've seen people promote multi-institutional custody. So, there's that aspect of it. But also just talking about kind of ease of use, right? That it is easier to create a Bitcoin wallet than it is to sign up for a Coinbase account. And so, if you're onboarding somebody else, maybe you set them up peer to peer, and they buy Bitcoin from you or something. I don't know, or they sell goods and services to earn Bitcoin using BTC Pay Server. That will continue to have that adoption. I also think that different people live in different jurisdictions. So just because here in the US you have first world privilege and you can go buy an ETF, if you're living in a country that, for example, is like Cuba or North Korea, you might not have any other option than to self custody, right? And so I think that we have to keep in mind that uh, Bitcoin is a tool for uh, escaping totalitarian governments, and not everybody necessarily needs every feature of it.
Yeah, it's a good point of like, and this is actually something I've learned with the podcast, because I did it global and not just in the German speaking area. I could have just like spoke only German and only speak with Austrian and Germans. But speaking with African Bitcoiners, speaking with Indian Bitcoiners, Australian Bitcoiners, American Bitcoiners, opened my eyes a lot to the use cases of Bitcoin outside of, like number goes up, where you have situations where someone, only because Bitcoin exists, can break out of a very bad situation, and we had like multiple of those cases. But then also just today, like just the episode before that I did with Rick famously lost 25 Bitcoin because he stored his seed phrase online, and so he did self custody, but he lost it. So it is always this interesting argument of, with great power comes great responsibility, and there are 100% people better off that might just like have an Bitcoin ETF that say like, oh, I don't trust my own technical skills enough, and then I want to outsource that, which is fine. I'm just always concerned that more people have to take self-custody and running their own node and like doing the defensive part. And I think there's like a lot of people, like there's a strong core, no pun intended, a strong core people that actually defend the network and really make sure that Bitcoin is always protected. There's a lot of people that really care about the freedom aspect, very much so.
Yeah, and look, at the end of the day, I like to point out that all the Bitcoin are self-custodied, right? So Coinbase like holds its own keys, and that they run their own node too. They have to, and so yeah, I don't think that there's like a threshold question. I think that my biggest concern would be if Coinbase or other custodians started lobbying the government against self-custody, right? And saying, oh, there needs to be more KYC AML and you shouldn't be able to hold your own keys. That would be a problem. The reality is that I see them lobbying for the opposite. And so firsthand, right? It's not like they're doing one thing in public and doing another thing in private. Like I think they've been very consistent about having that ethos of being friendly towards self custody, and they actually have Coinbase Wallet, which is a self custody product. Now, it's Ethereum centric, blah blah blah. I get that, but look, it's actually interesting that self custody is even more important for the DeFi Ethereum entrepreneurs and ecosystem in some ways than the Bitcoin ecosystem when it comes to public policy. So a lot of the debates in public policy are not about should you be able to hold your own Bitcoin. They're about should you be able to hold your own derivatives contracts on a DeFi exchange that is outside of CFTC jurisdiction, right? Which is a far more complex legal question. But if they can hold the line there and defend your right to hold a derivatives contract outside of the walled garden of TradFi, they're essentially, I'd argue, not a human shield, but a first line of defense against governments encroaching on self custody.
It was interesting to see because one thing I heard. I mean, I'm not in America, and so I don't have the politics as close as the Americans. But one thing I heard from Americans saying like this was a thing where under the Biden administration, it was a lot more hostile to crypto and a lot more hostile to like altcoins. And this is now kind of gone with Trump, where there's a lot more friendliness to crypto and altcoins. I mean, he himself does it. And so this might be just like one small thing that kind of happened with the new administration that from the point of a Bitcoin maxi, not bad, but like just like I mean, some probably describe it as bad. I don't really care about it because I think in a free market, Bitcoin will win either way. And as the more free the market is, the better it is in a way. And so that might be the case. Did you witness that like crypto and altcoin project that are kind of scammy are now surviving better?
Yeah, I really see them as the canary in the coal mine, right? But another way to think about them is when an aircraft, military aircraft, is being shot at by a heat-seeking missile, they'll blow out chaff from the back, which is a way of getting the heat-seeking missile to explode before hitting the airplane and to miss the target. And so I think altcoins have been very valuable in that regard, that they have been a denial of service attack on regulators, where regulators have been so busy asking themselves, oh, is it a equity? Is it token? Should it be regulated? How should issuance be regulated? And then it created a very positive contrast with Bitcoin, where they say, oh, well, Bitcoin's obviously a commodity because you have to mine Bitcoin, and so there's no centralized issuer, and so it's fine. Which is really subversive when you think about the monetary competition that's happening. And so I think that the whole altcoin debate gave a lot of time and room for Bitcoin to gain a foothold and to become entrenched, and now to integrate into the financial system. The key problem with altcoins is liquidity, right? So when we look at why are we, or why am I a Bitcoin maximalist? You could point to like the technology, right? I do think Bitcoin has better technology than all the other altcoins. It's the most reliable. It's the most battle hardened. It's very Lindy. It's the first. But it also just has a lot more liquidity than the other altcoins. And so when you think about currency competition, I think that a lot of it comes down to liquidity network effects that are self-reinforcing. And so the more liquid Bitcoin is relative to number two, like Ethereum, the more liquid it will be in the future. And so that gap is only going to continue to increase. And we saw this very recently. There was one day where there was a deleveraging event where Bitcoin was down. I think Bitcoin was down like 10%, and Ethereum was down like 30%. And the reason why that happens is because Ethereum's order books are so much thinner than Bitcoin's order books. And there's so much less participation in those markets, and there's just less ability to absorb shocks like that. And when an investor looks at this market, they say, well, I don't really want to hold something that's illiquid relative to Bitcoin, right? I want to hold what is the most liquid asset, especially if they're deploying $10 billion, right? Why would you buy $10 billion of an altcoin whose market cap is $10 billion, whereas Bitcoin's market cap is $2 trillion? You don't want to move the market, right? And so I think that altcoins are just a huge distraction in general, which is positive when it comes to policymakers, but it's negative when it comes to investors.
Is that why the Ethereum ETF is not as successful as the Bitcoin one?
I think that's part of it, and I also think Ethereum has a bit of a marketing narrative problem. When we talk about Bitcoin, our narrative is digital gold, right? It's the scarcity. There's only going to be 21 million Bitcoin. It's better than gold. It's an upgrade. Ethereum, they try to say, oh well, it's ultrasound money. So they try to say that it's like ultra digital gold, right? It's better than Bitcoin and gold. At the same time, when it comes to the demand picture for it, they emphasize the world computer aspect of it, right? That, oh, you're going to actually use this system in order to send stable coins around. And then the question is like, well, hold on, am I holding stable coins or am I holding ETH? What? Why are you, promoting stable coins here, or tokenized securities, or all this other stuff? And then furthermore, why is it that Circle and Tether and Stripe and all of the other leaders in the stablecoin industry are launching their own layer ones that compete against Ethereum? So I think that the value accrual thesis for Ethereum is really challenging and has not gotten a lot of people excited on Wall Street because it's just so all over the place. And that Ethereum itself, it's got a spotty track record in terms of having switched from proof of work to proof of stake, which I think really questioned, how decentralized is it? Because in a really truly decentralized ecosystem, I don't really see how you could transition from proof of work to proof of stake. Um, I'll just point to the obvious. They had to create an official contract that was endorsed by the Ethereum Foundation that said, okay, everyone, deposit your Ethereum here to transition to proof of stake. And so just the moment you have an official contract, you're not decentralized. Let's not kid ourselves. And so I add on the difficulty bombs where they kind of forced everybody onto the new chain. It doesn't have that key advantage that Bitcoin has. And so that's why I think that it's going to continue to struggle going forward.
Is it? How do you look at the current debate also with Bitcoin, the relay policy, with op return and with knots in particular? How is that for me? Because I look at that and I feel like 2017 we had the whole debate with block size, and this was a way more. I think everyone agrees it's a way bigger issue. Changing the op return limit versus changing the block size. And so when I look at like what people are discussing, seeing now this specific debate shows me how much more decentralized and how much more robust actually Bitcoin already gotten, that we are now discussing and debating things on a way higher level that have less impact on the fundamentals of Bitcoin. And for me, my main takeaway from that whole debate is Bitcoin is extremely decentralized, and there are a lot of strong groups that are willing to defend it very, very emotionally.
Yeah, so I think that the more inconsequential something is, the more inflammatory the controversy is. There's a famous saying for this: bike shedding, right? So you're building a nuclear power plant. What do people end up disagreeing on? What color should we paint the bike shed? right? Because getting into the other debates, it's either not a debate because it is the way things have to be, or it's so complex from an engineering perspective that it's not a debate that people can easily engage in. So if we talk about, for example, like multi-sig with Taproot using Frost, and debating kind of the key signing process and the strength of the cryptography, uh, way too hard for normal people, right? Or even debating like quantum cryptography, way too challenging. Like it's way above my head, right? Way above my pay grade. I don't pretend to be an expert, but debating spam on Bitcoin, that's a lot easier to debate, right? So I think that it attracts debaters. So that's for one. Two, why has this become such a big issue? It's really because I think that when we look at the block size wars and kind of the time between 2017 and today, or really the time between 2017 and 2023, I would argue, there was a view that Bitcoin adoption is all about freedom money and the self-sovereignty. And so when people are using Bitcoin on chain, that is going to be the demand for block space, and that's going to drive up transaction fees. Two things happened. One is that I think Lightning ended up being more successful than people expected it to be. And so it actually took a lot of demand away from on-chain transactions. SegWit and Taproot adoption have also decreased demand for block space because they're more efficient. And of course, the Wall Street has taken away demand for block space because now when you have somebody who bought Bitcoin at Coinbase in 2015 and they sell it to the IBIT ETF in 2025, that is not an on-chain transaction, assuming they just left it at Coinbase, right? They sell it on Coinbase. BlackRock buys it on Coinbase. It's just a SQL database ledger entry, and it has not created any on-chain demand. And I think that then means that there's a vacuum of block space that gets filled with spam, and then people get upset about the spam. And I think it's totally legitimate to get upset about the spam. Like, in an ideal world, that vacuum would just go unfilled, right? We just have smaller blocks. That is good for nodes. And that's great for transactors who don't have to compete with spam. And so then we can get the cost of sending a Bitcoin transaction below a penny, sub Satoshi transaction fees. It's all great. Unfortunately, there's bad actors out there who are spamming the network. And how do we deal with that? I do think that there is room for lowering the op return limit to something a little more reasonable. So I think that, getting it below 200 bytes is more reasonable than just having it uncapped or at, 100,000 or 10,000 bytes or whatever it is. So that I think is what has caused the debate, is the lack of economic demand for block space, and we could talk about decreasing the block size limit as well, or we can just wait. I think ultimately there will be demand for block space, right? Even if it grows much more slowly than we expected it to 5 years ago. But maybe the thing that will be most bullish for block space would be if fiat financial system or payment rails started falling apart, right? What if Visa or the Federal Reserve, stop working and all the payments are stuck, and then people have to use on-chain, or use Lightning that will cause channels to open and close. That would be another way that spam goes away, is it becomes too expensive.
And I think this is the major thing is like, right now, I transact in Bitcoin on chain every single week, and I kind of like that the fees are so low. But I'm also well aware that how does Poponet put it? Poponet puts it really nicely. on-chain transactions are like rolling in a Rolls Royce, and for most people, it will be just way too expensive to do it in the future. Right now, it's super cheap. It's like I send $1,000 to El Salvador, I pay like 70 cents for that. That's like a super cheap transaction, and it gets confirmed within 20 minutes because paying 70 cents is almost like priority now on the blockchain. And I think this is a short-lived luxury that we currently have. And this luxury will move up to Lightning, to Fedimint, to all other projects. And the main chain, we will spend tens of dollars, hundreds of dollars, I think at some point even thousands of dollars for a transaction, because Bitcoin, the main chain, is the most secure thing. And this will just be like the most secure we'll ever have. And this will be the transaction that you make for a huge transaction, not to like pay an employee for like $500 or like buy a coffee or for like that.
Yeah, maybe, but maybe not, right? So even though Bitcoin's the most secure, on-chain transaction is the most secure, look, oxygen is the most valuable commodity we consume as humans. We don't pay anything for it, right? And so I think that if the protocol researchers continue to make efficiency improvements to how we use on-chain, and like imagine a world where Visa says, actually, we're going to move everything to Lightning, and we're going to run one Lightning node, and Visa payments will be free. What does that do to demand for on-chain transactions? I think it probably decreases it. It would make Lightning appear to be very centralized, even though it continues to be permissionless and interoperable. But that you would have, just one huge node. Everybody's connected to it. It's clearing like trillions of dollars worth of Bitcoin, and on-chain transactions continue to be very cheap. I think that's fine. I think that that's a fine outcome. It means that we've won before, beyond any expectations we could have ever had. But it's, and I also think that Bitcoin continues to be just as secure, even when transaction fees are very low and the block reward, the block subsidy goes away. I still think Bitcoin continues to be secure because Bitcoin mining continues to be permissionless. And I think that that's ultimately the counter argument for when people say, oh, Bitcoin mining is centralized because you have these mining pools that are have all this market share. Yeah, true. But starting a mining pool is permissionless. Bitcoin mining is permissionless. And so anybody can go in there and compete. And again, it's the option value that I think is determinative, not is the option actually being exercised. Is everybody mining? Is everybody running a node? Is everybody holding their own keys? No, we don't need to achieve perfection for Bitcoin to continue to be the most decentralized monetary system in the world.
That's interesting, because I always think or thought that an on-chain transaction at some point will be extremely definitely a lot more. I mean, it's also like interesting because we talk now in dollars, and dollars are devaluing at a rapid pace. So like talking about a dollar value of an on-chain transaction fee in 20 years might not be as relevant as the dollar might change face a lot, or like have a different name, or like whatever it is. But having more, because I'm of the opinion, like I do everything on chain as long as the fees are not too high. I like on chain more than Lightning, like obviously. I have the plan to own as many UTXOs as possible and as big as possible. And so I would prefer a way where it's still possible to do on chain, and where I don't have to go to Lightning or Fedimint or other layers for like I don't know, like a transaction of today $1,000. Probably like we already see it. Like if you buy a burger, it's mostly in Lightning already, but there's like other reasons, not only the fee but the instant settlement, like the speed and all of that. But I don't know. I have a hard time believing that, because it's like the whole world moves to that thing, and I think just like the on-chain layer will be so busy. I mean, of course, not for small transactions, but it's still like we are so small, and I mean, yeah, I don't know. have a hard time believing that we will have low transaction fees, even in a world where most people use Bitcoin and it's a base layer.
My expectation is that the past is a guide to the future, and that transaction fees will be volatile, and that high transaction fees will cause changes that will bring about low transaction fees that will attract demand that will cause high transaction fees, and that it'll continue to just be bouncing around.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroSeed is not selling the washer. MicroSeed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.